Cool. All right, we are live, ready to go. Welcome, ladies and gentlemen, to another episode of the Financial Life Podcast. I am still doing another segment of the Military Mondays. This one had to be rescheduled, but we got it in, as we do, as we veterans do. So, I think my guests are being flexible and doing what we got to do to get this going here. So, before I get into everything else, as usual, got my shameless promotion here. So, as some of you know, I do some stuff with financial literacy, some credit, coaching, all that stuff. So, if you'd like help with that, go to speakwithmatt.info. Again, speakwithmatt.info, and we can you'll book a call, 30-minute clarity call, talk about it. Also, this episode is sponsored by Born to Risk, which also created started by another veteran, the Marine Corps like myself, and I'm one of the authors of the book. And if you'd like a copy, reach out to me. With that being said, I'm done. I'd like to welcome to today's segment of Military Monday, Michael Shermer. How you doing, sir?
Oh, I'm doing well. Thank you, Matt.
No problem. So let's get right into it. Michael, what branch of the military did you serve in? And be careful how you answer this question. It might get you kicked off the podcast out the gate.
Well, I served 30 years in the U.S. Navy.
There we go. So I can't kick you off because I served the Marine Corps, we're Department of the Navy. So you
Mhm.
know what? I really can't be like, no, get off my podcast. All the fun stuff.
Oh,
How
yeah.
did you get into the Navy and not like, the other branches? 'Cause everyone's got a unique story to like they're gonna go with one branch and then they got into a different one, or some people's like, no, I went right into the one that I wanted, and then things happen.
Yeah, well, I actually did, go to all the branches to see what was being offered. And
Okay.
so, of course, what I wanted was something that was more, medical related. So unfortunately, Marine Corps, doesn't have their own, but,
Yeah.
Navy does provide that. Um, I checked out the Army, just wasn't quite feeling it with the Army. And I also did try to connect with the Air Force, but for some reason I could never find anybody in the Air Force uh,
This is
recruiting
the Air
office.
Force.
Yeah, and I even tried calling, left messages, never got a call back. So
That's interesting.
the
Wow.
Navy had the best offer, and that's that's uh, that's what happened. Uh, so went to boot camp, became a hospital corpsman, and the rest is history.
There you go. There you go. It's funny with the Air Force, like, because when I was gonna go join it at the time, I think I talked to him twice. The first time they weren't there, and another time it just seemed like, I don't know. They're like, guess what it is. They're like, they're just depressed. I was like, I don't think I want to do this. It was just, I was like, ah. So, and then I joined the Marine Corps. Go figure. Okay. So your time in the Navy from there, and what else happened between then and like what with what you're doing right now?
Yeah, so I did 17 years enlisted, promoted all the way to chief petty officer. Uh, Went back, got my master's degree at the University of Southern Mississippi in healthcare administration, uh, and then commissioned as a medical service corps officer. Uh, 13 years as an officer, and then retired just last year.
Okay. Oh wow. So you're like fresh
Yeah,
out of the military. Oh wow. So there's nothing like not it's not like I've been out for 10, 20 years. Like I just got out last year. Wow.
yeah,
Okay. Cool. That's a journey. And it's cool that you started on the enlisted side, and then you went to the officer side, you know.
yeah.
'Cause, like, I always tell a difference in the Marine Corps. This is true of other branches where you get officers that come straight from college, have no experience whatsoever, but the ones that were prior enlisted had a different bearing. They would walk a different way. And I was like, yep, I'm not gonna make him angry because I will have a very shitty day. It's two different, two different people for that experience. So okay, cool. So with that being said, what are you doing? What are you doing now?
Yeah. So I actually got into the life insurance industry. Prior to retiring, I actually got introduced to the, what life insurance really is, um, and saw that, there's so many more applications to using life insurance than just what we know as, a death benefit.
Right.
And, it was actually surprising to me that uh my 20 at that point was 26 years in the military, and the only thing I really knew about was, the fact that I had SGLI. My wife had actually got us to get term policies when our children were born, but there was never any real education about permanent policies. The difference with whole life, universal life, index universal life, what you could do with those. And so I'm starting to learn about living benefits, and, that you can actually take loans, against your cash value and use them for anything. And I'm like, well, why don't we know more about this? And so that really started intriguing my curiosity and learning more about it. And so made that decision to actually get involved while I was still active duty. Um, went and got my license. Once I knew my route to retirement, when that was going to be, I really started engaging more as a producer and helping people part time. And then, of course, once retired, now doing this full time. So made that career shift from being in the medical field to looking at how I can help people financially, and, with thinking about what their medical would look like in the future, through the living benefits if something happened.
Right. What's your opinion on, I mean, financial literacy in general? Like, why do you think people don't know so much about what you can do with life insurance? Because I know because I have my life insurance license as well, my life health license. And I learned a lot more. I was like, wow, there's a lot you can do with this. And still to this day, like it's not known. People still think, like you said earlier, it's you have and then there's death benefit and that's it.
Yeah. Well, a lot of it is we pass on the knowledge of what we know. And so what we know is from very early on, when we're children, we get a savings account
Right.
and put money in savings. And then once we enter the workforce, we learn about 401ks. And so we think of retirement structures in that aspect.
Right.
And then, if we get around the right type of people to think about outside investments, then it gets into stocks and mutual funds and investing that way. But if there's not anybody in our circle that talks about life insurance, then that never really enters the picture. And we really don't think to do research on our own about that. And that's why, like, if you as a life insurance agent, you're aware that September is Life Insurance Awareness Month. And so, you think about this, and I actually saw a interesting post on the 6th of September that it was 401k day.
Hmm.
And I thought it was funny because 401ks get a single day in the month, but life insurance has a whole month dedicated to awareness. But that just tells you how pivotal it is to spread the word of what life insurance can do, from, building wealth that you can use in retirement, having the living benefits that, uh, will, if you get a terminal diagnosis or have a critical chronic illness, that you can tap into the death benefit early to help pay for those things, and also replace lost income because you're not able to work. And those are things that generally don't get talked about a lot. Uh, and I think it's something that, with what we're able to do here, particularly, with this podcast, is just, get that information out, disseminate it, you know, uh, get educating as many people as possible. It may not be the right time to pull a trigger on getting life insurance, but at least you know more about what it is that it does, so that when the timing is right, you know what to look at.
Yeah, I agree. It's educating. I mean, with what I do, it's the same thing. It's educating people on what the topic is, understanding how it works, and how can you use it to your advantage, or what your goals are. Because it's a lifelong thing. Credit's a lifelong thing. Insurance is a lifelong thing. Taxes are lifelong. And yet, these are the three least understood things in our society, and people like no idea. And so I remember when I was selling life insurance. Um, like kind of like my boss time, he had an appointment to go to present life insurance benefits to some employees, and one of them didn't have. I don't want to say the right mindset. He just didn't have the right view, and he was like, life insurance. I don't need that. You mean my girl can kill me and she'll get rich? Psh, I need benefits right now, and I'm like, it's not how it works. Like, and the thing is with life insurance, it's so easy to put off. I've heard
Mhm.
too many stories where people say, I don't need this, or I'm gonna put it off. And then it's almost like the next day or sometime soon, something happens to them, they
Yeah,
pass away, get a screw up accident, and it's like, and that's the thing about it. It's one of those things where we take it for granted and nothing happens for so long, for so long. And then pow, you're like, oh, I wish I had it then.
yeah, yeah, and that's one of the things that, I think is important to start early thinking about life insurance. When you're young, healthy, you're guaranteed insurability. The younger you are, the lower the cost of insurance is. Um, so think about it. You're in your 20s, in the prime of life, where you're young, healthy, no health conditions to worry about. Is the best time to start a policy. Uh, and then, because, when we get into our 40s, 50s, the life changes, our bodies are changing, there are health conditions that start creeping up, and those can affect the cost of insurance or our ability to get insured. Because, what happens if you end up with a cancer diagnosis? The insurance company's not going to insure you if you already have cancer. They're
No,
going to know that it's been it's in remission, and that you've had a certain amount of years in remission to be confident in insuring you. So, those are things where you think about it early on. Even if you don't think you need life insurance, that is the best time to get it, because what about when you get married? You have children. Now you've got a mortgage, you've got all this debt. You want to put
yep,
your kids through college. Getting it done now while it's, cheaper, is way better than waiting, 10, 20, 30 years. And, also one of the things that, I had the pleasure of sitting in a webinar with Fidelity and Guarantee Life, one of their reps, going through and talking about some things, some of these strategies with their products. Uh, they actually showed where a newborn started on a policy, and the parents only pay for 23 years, put in about somewhere in the neighborhood of $27,600, and over the life of that policy, the child at age 65 could start taking $34,000 loan, and that would last for the 25 years, and there still be death benefit to pass on to the family. And so these are strategies that, are available to a lot of people, but if we don't get the information out, nobody takes advantage of them.
correct. It's to getting if it's getting the information out, and also it's sitting down people and understanding that it's not just it's like credit and life insurance. People think it's simple, and there's more to it than just do X, Y, and Z. There's strategies to both. Life insurance definitely requires strategy. And that's why they need to have an agent like yourself, sit down with them, ask questions, educate them, look at their goals or needs, and then say, okay, let's go with this for right now. But then, it can always change down the road. Life insurance isn't something that's set in stone, unfortunately. If you get people that, because I remember a story when I was selling for combined insurance of a lady, it was supplemental, and they had, there was a lady who got a policy on her husband back in like, I think it was the 70s or 60s. It was a while ago. And then he passed away in like 2019 or 20, something like that. The policy's only for like 3 grand. And because of inflation and things increasing, she found out she's like, wait, my policy that doesn't cover this. And she called back the company. It's like, yeah, this is what you have, this is what you got, but this is what it covers. At that time, like no one came back and said, hey, let's update it and get you a policy with this that's got a higher death benefit. So it was like people think that too as well. It's meant to be ours what is right now. You're supposed to, would you agree that people are supposed to get their policies looked at a minimum once a year? Just to
Yes.
be like, hey, what happened,
Yeah, yeah, and that's with the organization I'm with, our my parent organization is called PHP Agency, and that's what we teach is do the annual reviews every year. Contact your clients and sit down and go through what has changed in that past year. Have you moved? Do we need to update your address? Simple things like that. Are your beneficiaries still the same? And then we go through the financial analysis again. Is there anything different here? This is what we had last year. Did any of your debts increase? Did anything decrease? Is your coverage still meeting what your needs are? Or maybe your needs have decreased and maybe we can save you a little bit through either decreasing the premium, the coverage to decrease the premium, or decrease the coverage to have more money going into the cash value where it grows more. Different things that can be done to really keep, the client at the forefront of what their policy is doing, and also make sure they understand what their policy is.
Yeah.
Um, how many times I've talked with somebody and said, "So what kind of policy you have?" Well, I'm not really sure.
Or they
Well,
think it's one thing and then it turns to be something different. And it's like, that's not what you have. Oh, I have this, let's check it. And they call the company, and it's like, no, you have this. It's like, yeah, education. Do you know what percentage of term policies actually pay out?
So it's actually around 5% of term policies pay out. 95% go unpaid out. They expire before they're utilized.
Yeah. When I first told it was two, so like 2 to 5%, but it's small percentage. And
Yeah.
people, and I remember when I first heard that, I was like, I had never thought of it. And I was like, only if there's like 2% or two, or now in this case, five, I was like, that's not a lot. And I thought, so many people have term and don't know this and think they're good. And then it's like, and people don't realize too, you know this, that once that policy expires, if you want to get it back again, your premium skyrockets to the moon.
Yes.
And have you had someone where it happened to them where like they were paying, $100 a month, whatever, and then it's like, yeah, I want to renew. It's like, okay, you now owe us 3 grand a month or something stupid.
Yeah, I've had one experience where someone was telling me about, their when they went to go renew it, it was drastically higher than what they were originally paying. And yeah, and when you think about it, term is great for top cover. So you have your permanent policy that, is going to grow and create a death benefit higher and higher if it's structured properly. But the term is a great top cover to wait for when that permanent policy gets there. And, one question that, I would ask anybody is, how long do you want your life insurance to last? You know,
Ooh, that's a bar. It's a great question. It's a great
It
question.
is.
I haven't even thought about that. I'm pretty well versed, but I know that I'm not like work. I'm not in it like I used to be. That's a great question that people should ask that we don't even think to ask. What do you mean how long I want to last? I mean, as long as I need to be, I guess, like forever or forever, whatever. You know what I
un-
mean?
until you
Ideally.
until the end, right?
Yeah, yeah.
So because you pay into it, you want something to go to your heirs, but a term policy, if you only get like a 10-year term, well, in 10 years it's done, unless you want to pay higher, keep it going and pay those higher premiums.
Much
But
higher premiums. Good God.
with a permanent policy, your premium never changes. It's already calculated to where, it keeps that policy in force until the very end. And then your beneficiaries get the payout on it.
Yeah, the different things of life insurance. What about what you do right now? How can I help out other veterans and who are still in and have retired? Are there programs for that, or do you have something that says, "All right, you have this policy with the government, military"? While is there some time frame when they get out where they can still roll over into something different, or do they have to start from scratch and have a whole new policy?
Well, now with the SGOI, they're the Prudential, which I believe is the only company that they're using to cover that. They do have the continuation through the VGLI. And then of course, as you get older, different age brackets, it does go up in premium amount.
Hmm.
Um, but that's just basically like an annual renewable term. Does cover terminal illness, but that's it. I would say if you're anyone that is looking for something that has more functionality, more benefits, particularly like our younger active duty members, look at a permanent policy, but particularly like an index universal life
Yeah.
that they can turn into like a life insurance retirement plan alert, you know, uh, because there's been so many changes with uh, the retirement benefits in the military that having something like a life insurance policy that you can use in retirement years to help supplement retirement income, having that in your basically your toolkit, you know, all these life insurance products, if you think about, they're different tools. So savings account is a tool, 401k is a tool, TSP is a tool, stocks are a tool, life insurance is a tool.
Right.
But if you only have one tool, are you effective at building anything?
Not
You
really.
know, think about a carpenter with just a hammer. How far is he going to get building a cabinet?
Not very far.
Exactly. So you need these different tools in your toolbox to effectively build a retirement. And so life insurance is just one of those tools that you have access to.
Gotcha. And that's essentially what it is, the tool. The people also see it as it's credit's a tool as well. I won't get into that right now, but you're right. I'm glad I said it's a tool that you want to use or as like say leverage for your retirement protection and stuff. And it's also what's known as a protective expense. I learned that term from the audiobook Why Budgeting Sucks by Garrett Gunderson, I think is his name. You should look it up. It's really good. It tells you about budgeting and why people don't do it, the psychology behind it. And he talked about like protective expenses that like, yeah, it costs you money, but also protects you. Insurance is that. You're paying money, but it's your protection for retirement, something happens on the line, things of that nature. As far as that goes. So for people that may not understand, and I've heard this, I understand it, but it always changes. Like, what is an IUL?
Yeah. So
How that
IUL
work?
is yeah, it's an index universal life insurance policy. And so basically you get a face amount like all the other insurance policies, uh, but there's a separate cash value account. And so part of the premium pays for the face and the administration of the face amount. The remainder of the premium goes into the cash accumulation, and then that builds. Every time you're paying a premium, making a premium payment, you've got money going in there, but it also you have different crediting strategies. So the life insurance company, they're taking all the investment risk. And so they're buying, purchasing bonds, options, stuff like that to increase monetary value. But you pick a crediting strategy, and usually there's a range. They're a capped or an uncapped strategy. But what they guarantee in the contract is a zero floor. So no matter what, you're never going to lose money out of that cash accumulation.
Right.
It's pretty safe. It's like a savings account on steroids, basically. They may have a cap like 9% interest that can be credited. So they're going to follow an index like the S&P 500. And based on how the performance is, if they have a cap of 9% and the S&P does 15%, well, they're going to credit 9% to the account. If the S&P does 5%, they're going to credit 5% to the account. But let's say we have a recession and S&P drops uh, to a negative 10%. Well, the zero floor protects you from any loss because you're not invested in the market. The insurance company is. And so all they're doing is they're not putting any money into your account for interest. And so you just stay there until the market rebounds. And when there's positive gain, they start crediting interest again. And so it's a great way to hedge against the fluctuations in the market when you have a 401k or your stocks, mutual funds, any of those variable products, as those are going up and down. If you have life insurance, you still have something that, the principal that you put in there is protected. And so, it's a great product to have that helps build wealth while you're young and working towards retirement.
That's good. Thanks for that clarification for what the word is looking for. Yeah, I will. Are you IULs are good for that to, you said hedge against what the market does, and the good thing to have along with the 401k.
Mhm.
Here's something I think you agree with. Here's my question for you, more opinion on it. Why should people avoid universal life insurance? And then kind of explain that, because it's like it gets you, and it's like it's really not the best policy for people.
Well, I mean, I think it's really a matter of looking at what is uh, the best option for the person. You have to really sit down and look at where they're at currently financially and see what is going to be the most productive tool for them. Uh, Universal life is a more expensive product. So, if the finances aren't there to be able to pay that kind of premium and they don't get the benefit out of, that type of policy, a whole life might be more beneficial to them, where, they get a larger death benefit or larger face amount with a lower premium because it's not as expensive. It's a fixed dividend account with the whole life versus an index that requires more management by the insurance company.
Yeah.
And so that's why the premiums are different in cost for a certain, the same face amount. So, you're just really weighing based on what we learn about our client and where they're at currently that best fits their need right at that point in time.
Right.
So is it the coverage that is more important, or is it creating that cash value that's more important. So
Yeah, that comes down to the individual. Um, Given the economic climate of today, everything going on in the world. I know this question is going to come down to the individual. Like, for someone looking at life insurance and things, given what's going on with the economy and everything else, like, what do you recommend they do?
well, I mean, first it does come down to having that conversation. Uh, it, like you said, it's individually based. There's no one size fits all in this industry. Without understanding the client and where they're at now, what their future goals are, it comes down to, the devising of what is going to be their long-term benefit of any product. But, if you don't have the conversation, if you don't seek out a professional to learn what these products can do, what they are, uh, well, there's not much you're going to be able to utilize them for. So you actually have to get that education. So the first step is always, learn as much as you can and talk with an expert to understand what you're looking at. So,
I like that. I like that. Okay. Then with that also, is there anything else people should know when it comes to life insurance that like if you don't see as being shared, social media, many misconceptions people have, anything else people should know as well?
yeah, I think the biggest thing is just don't procrastinate. Uh, the longer we wait, the more things change. And, if we just keep kicking that can down the road, you're never going to take action until it's too late. So start now, start looking more into what life insurance does and not be afraid of, uh, what, the myths are about life insurance. I remember hearing whole life was bad. You don't want whole life, but why? I can't tell you why I took that as good advice, but learning more about it, I found out that, well, actually there is practical use for having whole life. There's practical use for universal life. It's just learning more about the products. So, take the time to learn what you can about these things, and then make the decisions that are appropriate for your situation.
I like that. Yeah, I've heard. Have you heard the argument about term and whole life, and the people are like, no, buy term, that's a difference, and whole life, it's. I'm like, I won't go into that right now, but I'm like, I'm more whole life because it's if you use it strategically, it beats out term. I'm like, you can invest, but it's I don't know why that argument's still going today in the life insurance community. I've seen it. People will be like, no, well, we do whole life, it'll take out all these fees and you withdraw it. I'm like, but it lasts. You can build it up. It's tax free. I don't understand. And then they're like, well, term's better. I'm like, yeah, but as we discussed earlier, like less than 5% payout.
Yep.
So what do you do after? What do you do at the end of that? Like, do you get a return of premium if you get it, or do you have the ability to the opportunity to convert it to a whole life policy? It's not just so much as put it in a stock market, it'll be fine. Like, no, it's not. It works.
Yeah. You brought up a couple points there, with return of premium and, the conversion. There are companies that have a return of premium term. And like particularly, that's great for having that top coverage for like if you have a mortgage, housing prices. I'm in Maryland, and you can't really get a house for uh, less than 500,000 these.
Yeah, and you're gonna get like a box. I grew up in
Yeah.
Maryland. It's
So,
like, boop.
yeah, it's great to have that top coverage, and then when that term expires, you get that premium back that you paid. You know, uh, or if you get a term with a conversion option, there's certain parameters, but usually before you're age 65, you have the option to convert to a permanent policy.
Yep.
And but you have your uh it it's based on your health at the age that you started the term, not your current age when you do the conversion. So those are all also other things to consider with what the life insurance industry is doing to really change the landscape of making these products very beneficial to the consumers.
Yes, an important topic that is not the most comfortable to have. Um, it's really not. I've said a story before, but I remember when I was like 15 and I was helping my dad move and I was 15, I was 15. We're in the U-Haul truck and I'm sitting there just thinking about whatever. And to me it was random. For him it was like, you know what, son? When I die, I want to be cremated. Don't bury me. And I was like, what the fuck? Why are we talking about this right now? Like, what do you mean? It was really, really just, it was, to me, it was still uncomfortable. Now, and now that I'm older, I get it. He was thinking like, my guess was at that time what was happening long term, what it means for us as children. And he's like, yo, you know what? Cremate me, don't bury me. I'm like, what? Why would I? No, not right now. No, let's not talk about that right now. We're just focused on moving, but
Yeah.
it's a good parent. So, Michael, I thank you for being on, man. It's been a good episode. How can people reach you if they're like, hey, you know what? I like to get my life insurance needs um satisfied.
Yeah.
How can I reach this guy?
Yeah. So my personal company name is Freedom Force Group, and I do have a website, www.freedomforcegroup.com. And you can also reach me at my email, michael.shermer@freedomforcegroup.com, or you can also give me a call at 410-755-5882.
Cool. Awesome. Thanks for being on. Taking your time out of your day to be on my podcast, sir. I appreciate it. That's all we got for today.
Thank you.